Hi, I'm Michael Glass from michaelglass.com, and we're going to continue to talk about our basic trading strategies. Before we do, we always want to start off with our disclosures. Any symbols you see today should not be inferred as a trader recommendation, no matter what form of investing you choose, stock, forex, futures, options. They all have a level of risk associated with them. You can't lose all your money. The strategies that we're going to talk about today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is your own responsibility to at your own risk. So our quote for today is by Jim Rohn, and it says, "It is the set of the sails and not the direction of the wind that determines which way you go." And the reason I chose this is our theme for today is going to be the trend is our friend. Our initial video, we talked about our breakout strategies, which are high probability trading setups. And of course, we were talking just about basic trading strategies so that everybody can follow easily. The problem is if there is no trend, then there's no breakouts, there is no trade. So that's why we don't have a trade yet. And again, and we said this in the video, cash is a position. There is no need to force a trade. But our quote here, it is the set of the sails, it is the trend that determines the market and not the pundits. So even people like me are the gurus, Kramer, the CNBC, they can say all they want about a stock. But the trend and the sentiment of traders and what they believe is value, overbought, oversold, that's what sets the direction of the market. Not what any of the pundits say, not not even what some of the fundamentals say, because there are stocks that have great fundamentals, but if the sentiment, if to how people feel about that stock is not good, that will set the sale. It's simple value trading. What the market is saying is overbought and what the market is saying oversold. And using our technical analysis to identify those support and resistance levels as we did in our videos before. So again, the key to high probability trading, the key to being successful as a trader is to let the market work in your favor and understanding the playing field. And that again is understanding where support and resistance is and where is the trend. This allows us to trade with the odds in our favor. It allows us to level the playing field. And it allows us to identify whether or not we're taking a high risk or a low risk trade. That's what our case study is all about. High probability trading, support and resistance, and the trend is your friend. So today, we really just want to talk about the basics. Since we don't really have a trend, we want to talk about what it is, the different types of trends, and the general rules, so you understand why we're sitting on hands right now and we're waiting for the trend to once again take over and allow us to take high probability trades in the direction of trends and our breakout trades, which we already defined. So we know in general what a trend is the general direction that something is going. As far as the stock market, we look at our uptrends and the downward movements of price over a period of time. It's important for us to understand this trend so that it can tell us where price may go in the future. Nothing's guaranteed, but again, we rather be the river flowing than being a salmon fighting the river flowing upstream. But keep in mind, the market doesn't always trend. It's estimated it only trends 30% of the time. But the key is usually, and here's where I do agree with Kramer, but I like to change his words. Kramer says there's a bull market somewhere. I like to say there's a trend somewhere. It could be up, it could be down. And you have to find that sector, find stocks in that sector, and even though stocks only trend 30% of the time, there are thousands of stocks, so we can find the stocks that are trending. There are a couple types of trends that we want to talk about, and there's really two forms. First, there are trends in terms of price. As we talked about, there are uptrends on our left, and there are downtrend, price trending down. And of course, that happens 30% of the time for a stock. And then there's sideways. There's no trend. We're up, we're down, we're channeling, we're consolidating. And that's where the Bollinger Band trade that we talked about comes into play. But in terms of time, you have to look at it in short term and long term. And one of the things we talked about is dual time frame agreement. What is the trend long term, monthly, yearly, weekly, and we compare that and we try to find agreement of that on a shorter time frame, 1 hour, daily, 15 minutes. and we want to get agreement of those again, which allows the trend to be our friend. And even if we have a bad time, we enter the trade at the wrong time, we're allowing the trend to carry us back to where we can be profitable. So our general rules for trading the trend is first, of course, identify the trend. Are we in an uptrend or in a downtrend? In our picture here, they're riding the wave of the downtrend. Once you identify the trend, identify support and resistance. If we're in a downtrend, we want to be able to look for support and resistance, and we want to trade the breakout of the support. Then we want to confirm the trend of the price with volume. If the market, if the sellers in this situation are not putting their money and the volume is not increasing as we're moving lower, then that means the trend is not confirmed, and we may actually get a bounce at support instead of a break. So we want to identify the market direction, we want to identify support and resistance, and then we want to make sure there's volume that is confirming that the market wants to continue the trend. Now what we're going to do is go ahead and pull up some charts to kind of show you how the market is not trending right now and why we don't have new trades for our case study. So as you can see, as we begin to look at some of the major indexes, this was a period of time right between 11,700, 10,700. That was a down from August to November, and then we finally had our move up here in October. But now look at the last 2 weeks here, beginning of November. We're basically between 12,250 and 11,750. So with no trend, we're not seeing any movement in our individual stocks. Also, let's also take a look at the NASDAQ. Again, all the way up until October, we were in a range. We broke that range, and now we're sitting here in another range, 2750 down to about 2650. No movement here in our bigger index. No movement in our stocks. We'll go one more, and this is the S&P 500. Again, you can see the range that the market has been in. We broke out of that in October. And then once we came up here to the 200 moving average, we've sat in a range. And so my point is, we shared some breakout trades the other day, and none of them were triggered. Good. But, bad, the market's not moving. And so, I'll just walk you through a couple just to give you an idea. Here's Google. And again, you can see that same sideways price action. Let's look at price line. The price line is... you got the price sideways action, but right in here we had earnings, and so that's why Pearson had this big move up here. But overall, that's probably going to be the only one we're going to look at. Here's MasterCard, sideways price action over the past couple of days, just like the market. Apple, sideways price action, just like the market. IBM, sideways price action. I was trying to come up with another breakout trade, what we call a wedge, where we have resistance and we have a trend line, and looking for the market to resolve one way or the other out of that trend line. But I'm not even sure I really like this one, because again, if the market's not trending, then we can't let the trend be our friend. We're going to get ourselves caught into. So again, we have to also remember that sideways price action. This was Netflix. That no trade is a trade. That is a position. Cash is a position. Amazon, sideways. Goldman Sachs, sideways. So right now I'm just sitting on hands, still watching. Now, so here's FFIV, sideways, but this one's sideways to up here. The problem is, even if it goes up, over here we've got more resistance right here, just a couple dollars higher. So the risk-reward ratio on this one wouldn't be that great. Sideways price action on Caterpillar. Sideways price action on V. Sideways price action on Deere. Sears Holdings, sideways. Boeing, sideways. So what I'm trying to share with you, as I just keep showing you, is that this is what's going on. So here, Walmart made a little move up here, but now it's come back. So we have to let the market get its trend, and of course, anybody that knows anything about the S&P 500, we know that one of the biggest movers is financials, and so financials is Goldman Sachs, and you can see sideways price action. Another one would be down here at the bottom. Here's Citigroup, another financial, sideways price action, and Bank of America, another financial, sideways price action. So until we can get the market doing something, we can't let the trend be our friend, and therefore our breakout trades are not going to work. Now there are other trades to be taken during sideways price action, credit spreads, but that's not the focus of our case study. So I just want to give you guys an update of what we're waiting for, what we're watching for. Again, we're focused on high probability trading, allowing the trend to be our friend, taking breakouts with the trend, as simple, basic trading strategies that anybody can follow. So as we continue our case study on technical analysis voodoo, we're continue to share our breakout and pullback trades, but as we're just sharing, first and foremost, the trend has to be our friend, and that's what our video was today, to kind of show you why we haven't had new breakout trades, and also to say no trade is a trade. Cash is king, cash is a position, cash is a trade. And so what the good news, though, is that because the market is consolidating, our low volatility trades that we're going to share tomorrow, we're going to have a nice list because the market is consolidating. The market is in low volatility, and so we should have some nice breakout trades from our Bollinger Band setup. At the end of 2 weeks, we'll get back together and kind of share results, and hopefully we'll have a better understanding of how technical analysis doesn't guarantee us, but what it does do is allow us to be high probability traders. And if you're looking for more information, a book that I can recommend is Trade Your Way to Financial Freedom. In that book, they talk about the 7 key components to a trading system. And a trading plan, a trading system, is what separates winning traders from losing traders. Taking the time to document and actually come up with a plan versus getting on Google and trading the only setups. And keep in mind, we really are just talking about setups here in our case study. But really putting together a system is what separates winning traders, losing traders. And then the next level would be having a trader's mindset to implement that system is what really separates people. A lot of people trade have the systems, but their emotions self-sabotage that system. So we want to thank you and make sure you know that you can find us on Facebook, YouTube, and Twitter. Are You Financial Literate on Facebook, and then Move Up with Mike on YouTube and Twitter. We have tons of videos, educational videos that can help take your trading to the next level. And again, we have our free 5-part video course all about high probability trading. It's taking what we're doing here in our case study and really framing the market and really taking you step by step on how to put together your own high probability trading setup. Thanks, guys, and I'll see you next time.